So good evening, everyone. Welcome back. The panel discussion today will be to discuss the pain points that startups are facing today in the MENA region specifically, and how we can actually solve them. Before starting going through the discussions, I would like to introduce our panelists here. So we'll start with Renaud. Renaud is the CEO and founder of Zeo. Zeo is actually one of the success stories of the region. It's been focusing on the need for a flexibly operating business with streamlined customer support. Zeo was in fact backed by some of the top VC funds in the region. We are actually also proud to have Zeo as our partners at Scality. Our second panelist is Khaled Al-Houni. Khaled, I mean, you don't need any introduction, Khaled, but maybe there is that one person who doesn't know you. So Khaled is the managing partner of Noah Capital. They have actually announced recently that they've closed their first round of investment. Was it $75 million? And congratulations, Khaled. Khaled has more than a decade of experience of investing in MENA startups and actually helping those startups scale. Moving to the third panelist, we have Lee McMahon. Lee is the co-founder of both Clara and Support Legal. Clara and Support Legal are the two leading legal tech disruptors in the industry. Lee understands the challenges that startups face today to start their business and to scale their business. Again, we are proud to have Clara as partners at Scality. And then last but not least, we have Natalie. Natalie is the lead partner at TrueSearch in the Middle East. In fact, Natalie has started True's Dubai office. Natalie has an extensive experience of helping startups hire senior positions. I believe, Natalie, you've been doing this for over 11 years now?
13 years in the region, yeah.
13 years. Before TrueSearch, Natalie has actually headed the people's function at Property Finder and Dubizzle. And we're actually excited to solve the talent issues that we face today in the region with TrueSearch. So maybe I'd like to start this panel with a question. Maybe it would make more sense to answer that, to ask this question to you, Natalie, today. Let's start with the story. So let's say today I'm an entrepreneur, and I want to start my business today. So I think the first thing before going through starting my business, the first thing I would need today is I would need to look for the right partner, whether it was a co-founder or a CEO or a CTO. What would you say are the merits that I need to look for in that partner? What are the main points, main things that I need to look for in that partner?
Yeah, this is a common question that I get from founders if you haven't got a co-founder, because I think it's generally more accepted that startups are more successful if you have more than one person on your founding team, and it tends to be CTO. Actually, there's a lot of non-technical founders that need that gap. I think with every hire at the executive level, you have to look, not be blinded by purely charisma. Now, it's obviously very important to be able to get along with people, but just because you feel like you can sit in a boardroom with them for 9 hours, that's not quite enough. You have to consider diversity in all areas, and that comes from, how you make decisions, what you consider, because if it's just 2 or 3 of you at that early stage and you're trying to make the best decisions for the company, you have to have people that have the longer term mindset, people that are highly executional, that are maybe more potentially revenue driven, to look at the now, and then other people that would consider other aspects of the business in terms of the wider people function. That's obviously the one that's always overlooked. It's very rare to have that in an early stage team. So diversity in terms of how you think, maybe what your background is as well, so that you're just bringing different experiences to the table. And I find that people that have that across their early stage leadership team tend to be more successful. The biggest challenge, of course, is finding that, and that's the question that I get. So when you're reaching out to talent, there are only a small percentage of people that are looking for that founding team status rather than quite large packages, because obviously at early stages you can't afford to be paying people like that. So quite often you find people that have had a successful exit from a previous business that don't really need the monetary side of things instantly and are quite happy to look at equity and really believe in where the business is going to go. But so that's normally quite a lengthy search for most people.
I think also like getting that founding team dynamic right is so founding team and then early team both, right? Because is just so critical, because so much of why companies fail is because that initial chemistry or complementarity is off, either interpersonal chemistry or just right fit, wrong fit for that type of role early on. It's just so common that companies fail because of that. And it's actually I think not spoken about as much as we should in our part of the world, because we don't like to talk about failure, but there's so much to learn from failure, which is a lot of inter-founder strife and conflict is kind of one of the main drivers for companies falling apart at the early stage, right? And it's more common than people I think attribute. And then the other piece is just having the wrong, we talk about product market fit, there's also wrong kind of lack of fit on the role in the senior team. So if you're if you're looking for the right product guy who's going to really envision a product in a certain way, you need to find the right person fit that role. If it's slightly off, it can go really wrong very quickly. It is absolutely important to have a diversity of thought in the kind of senior team and founding team. But another thing that's a bit overlooked is what you want to create is whether, even if it's people familiar to you or unfamiliar to you in that initial kind of team, as you build an organization, it is so critical to have built the right culture that's a fit for what you want to achieve, but then also allows for diversity of thought and conflict, between different points of view in a constructive way, which is very hard to get right, and I think underappreciated as well. I think great example of, at least from the outside, I didn't work there obviously, but just watching from the outside, Kareem was very successful at that. So the founding team, Kareem, were able to on the whole, I mean, I'm sure there were kind of issues at some points, but on the whole, create that kind of positive culture of people that with very diverse backgrounds can kind of plug in.
Yeah, the disagree and commit, isn't it? Allowing it to be something that's part of your culture.
Yeah,
you
exactly.
might want that to happen, and you've got all these great thought leaders that have different viewpoints, but are you actually allowing them? Are you listening to them?
Yeah.
More importantly, so allowing them to speak up, but then actually listening to them, I think is probably the place where a lot of businesses might fall down somewhat, I have to say.
But one thing I want to mention, obviously, as a lawyer, is that even when you are picking co-founders, whether they're your best friends or someone you don't know, having it documented as soon as possible and having some of the hard questions asked around where do you see this going? What happens if we don't get funded in 2 years? How long do you want to commit? You want to be based here for the next 10 years? Or whatever those questions are. If you don't ask those questions, which most people don't, it comes back to the point of not having those open discussions with people. It comes as a surprise when someone's like, well, I thought we would exit in 3 years. So I thought I'd already have my money and I'd be gone. The reality is that's just not the universe that the startups are in. And so we emphasize the importance of asking those hard questions and putting into a co-founders agreement and having it documented from day one. Because when things go bad, and they do, and as lawyers, we're the ones to find out about it, it's always the ones who thought, well, it wouldn't go bad, so I didn't do the document. One of the things as well, when people start a company, if you go and set up a company now and the two of us just had an idea and we went 50-50, you might on paper have 50% of the shares, legal ownership. The reality is no investor in the future is ever going to accept that you own 50% of the company. You have to earn that, right? They're buying into your future effort to make the company and their money get to the next stage. So it's called vesting. Yeah. And a lot of founders don't understand this. And that's why those agreements right at the beginning understand vesting. If you don't sort it right at the beginning, what happens is 12 months later when you're having your first fight and it's starting to go bad, they're like, well, I own 50% of the company, so good luck, right? What are you going to do? And that's the end of the business. It's hard, startups, those kind of issues are more common than divorce, right? So the people just need to think about it. It's like a prenuptial agreement in a marriage, right? it's not ideal. You don't really want to do it. But if both people say, look, I'm okay if this fails and I know where the path is on a divorce, you enter into that relationship with open eyes, knowing, okay, if I leave, I'll get 2% if I'm lucky of the company.
I wanna both agree and disagree with you. I'll just like have like this kind of weird cognitive dissonance about like having like the startup ecosystem, which is, I think on one front, 100%, I agree 100% that you have to kind of have clear legal infrastructure documentation, especially of like, you know, the shareholding arrangements, especially between founders, right? But I think what is missed, and back to that earlier point on culture, is irrespective of what you have in the agreement, you take out the agreement when things are broken, right? And again, irrespective of what you might have in an agreement, unless there is a wider understanding of roles, of how to manage conflict, of how to manage, the ultimate conflict is breaking up, right? And how to kind of think about internal relationships, that almost matters more. And getting that right up front, emphasizing that, and kind of the nature of the relationships between people, between people in the organization, the founders and others, almost trumps the legal requirement, because you can put anything in an agreement, but then if there's the right level of acrimony, you throw the agreement out the window. You call the lawyers then. You know what I mean?
Absolutely. And, you know, two reasonable people will always settle and resolve
Exactly,
it if they come from the right mindset. But I completely agree. Documents are there as an insurance policy, but what happens is often when emotions are running high, and you might have been further down the investment and valuation stage, people see real money on the table, right? So, so that's where it comes in. But that's where investors are really helpful, because they come in to mediate. Almost all the times when we've ever got involved as lawyers, most of the time, it's usually at the direction of the investors who have stepped onto the board, taken those management roles, cleared the dispute out, and resolved it. So it is a good point.
This document, I think, is you need it for divorce, but also after some time to know who should own what type of equity, because at the beginning everybody is saying I'm going to do this and this. Some people deliver, some people they don't. So at the end of the first year you can say, okay, you have spent 50 weeks working night and day in the company, and you have spent only one day a week. That's fine, but you don't own the same thing. So allocating the equity from the early days is also something which is interesting.
But I think like I'm all a bit jaded, because like what you were saying about mediating shareholder founder conflicts, it almost never works out. Like at least once you reach that stage, I mean, there's an initial period. It's almost like a life cycle. So in that kind of seed cycle, when the company is like reasonably new, founders come and go, and that happens, and that's fine. But then once you hit like Series A, B, once you start having those conflicts, companies rarely survive that. But yeah, so I think it is like such a difficult piece to get right. And now that we have like some volume in the startup ecosystem, like it's something worth talking about and discussing and making sure we've got it right. The other kind of really delicate step is also at the founder level, I think as you were mentioning, you might be good for a certain stage, and then after a certain stage it doesn't work. Founders, because they're founders, which sets them apart from other members of the team, is they need to, you know, can go in two directions. They need to either reinvent themselves into a role where they're continuously adding value without sort of hogging a function. So you might be, you know, a great project manager with a kind of CTO role, which traditionally had product under it, for example. But then they're much better product people to kind of take that on. Having that ability to reinvent or evolve really is really tough, like for founders. So that you do have that kind of conflict where they're, you know what, like everything around the product is mine. Nobody talks to anybody else. It's mine. And then not realizing that actually I need to kind of yield that, but I need to go on a different level or in a different tangent where I can add value, is a skill and a journey that I think is also very tough for founders to understand and to get to.
The humility and the ability to say, there's someone that can do this better for the sake of the business. I'll step back from this.
Yeah.
And
I was thinking of like writing an article about, maybe this inspired me to do it, which is called like the good guy paradigm. All the good founders tend to be humble. All the founders that have gone to a certain stage, come from certain backgrounds, and have a innate humility to them as well, which I think matters to be able to do all of that.
So I think we all agree that one of the most difficult and pain points that startups face is just finding that partner and the right partner, and which is why we have partnered with recruitment companies like TrueSearch to help find those partners, and then we have Clara to help us put in the right legal documentations to ensure everything goes right. So okay, now continuing on that story, now let's say I found that right partner and that right CEO or CFO. Now my next step is to go on and find the right partner in terms of the ecosystem enabler, whether it was a co-working space, I don't know, an incubator, an accelerator, a VC fund, any system enabler. What do I need to look for now when I go search for those ones?
I think maybe the most important one is again, my bias, the investor, right, within those. Because co-working space, you can move, right? But once you have someone in your cap table, it's very hard to kind of remove them, whether they're an VC or an angel or an accelerator that has an equity component. I think people should do a lot of like their homework, like around the people. So the brands matter less. It's who are you going to deal with within that organization. And this is a global thing. So the same is happening in Silicon Valley, and similar things will happen here. Is, I'm going to raise money from X. They're coming onto my cap table. What can that person, that individual, do for me? And what are they like to? Because that's a different type of partnership. That's also very hard to get right, and it can go well, it could go badly. So I think founders should really spend time talking to other founders where they've had these people on their cap table or as board members, and understanding what they're like. How do they add value? Do they add value? To what point? Maybe they're good at some stuff. They might be worse at other stuff. And particularly when things go bad, when things go well, everyone's a hero. Like, what happens when things are not good? When there's a challenge, because all companies, as Renaud can attest to, always go through a rough patch, right? So it's like,
absolutely.
What there's no like just I mean, it'd be nice if you had like a. But,
So one of the I'd like to call them ecosystem enablers, or they're supposed to be ecosystem enablers. It's the authorities that actually provide the licenses. So you help many of those companies with that, and you help them look for the right place or the right licensor to work with. So what are the main things that startups want to see, or what are the main pain points that startups want to see those authorities helping them with?
Yeah, so the pain points are the speed in which a company can be set up, whether that company is accepted by a bank, so do they have a banking relationship, upfront clarity around process. So often you'll see a company can be set up at a cheap price, but then there's a huge tail of other costs associated with it. And then startups, unfortunately, they don't know that until they're well into the process. So communication's a big one. Having a support team that is actually truly supporting startups. So when you come in and you say, hi, I'm here to apply for a particular company and I'm a startup, you've got people going, yes, that's great, I'm here to support you and we're going to get you set up. Traditional regulators were more designed where there were third-party corporate service providers to come and do a lot of the hard work, and they would used to do it at volume, whereas startups do it themselves. So having that relationship that's actually been bespoke for startups is great. So speed, price, flexibility, and community. Because even if tomorrow it was the cheapest possible place to set up, that's actually not the test. If they know there's an ecosystem community for startups, people that they can share ideas, that they have, that the community or the regulator has actually helped to source mentors and partnerships for them, that's quite valuable for a startup. It's a lot harder to do that individually.
Khaled, you've invested in so many companies. I mean,
I think one thing is consistency. I mean, everything that you mentioned, but additional thing is like, there is without naming any names, but there is a tendency across our region and emerging markets more broadly, to be fair, is that the regulators move the goalposts, right? Like they'll be like, oh, this is the regulatory regime, then it's this overnight, and then that creates a whole issue, right? Like, and it's quite common. It's getting better, I think, overall, but I think that's something something that we would love, like authorities, regulators, to be much more mindful of. Is once you pass something, these small startups, like they built their, if they choose to incorporate there or set up their gut license there or whatever, I mean, they've really that's an investment, right? And it's very disruptive to shift, right? Like to move jurisdictions is not simple, right?
Very complicated.
Yeah, so it's important not to shift the goalposts too often, as much as possible. Like, this is what we want, we're only going to make it better, but not just change the narrative midway through. So I think that's a really important thing for authorities.
So, Renaud, as a startup, what's
It's,
what's your view on that?
I agree 100% with you. I don't want to name the jurisdiction where we were initially, but it was not possible to have different class of shareholders. So we had to create, when we made the Series A, we had to create a holding company. And fortunately, at the time, there was a ADGM. Otherwise, it would have been Cayman Island or other fancy stuff. So it's important also to think about, is it investment friendly, the place where I'm going to go. And you mentioned the community, very good idea for a new startup to go in any community. I think there are plenty in Dubai. You will meet people that are just 6 months ahead of you. You just sit, most of the entrepreneurs I know, I'm part of them. If you receive some questions, you will ask, you will share your experience, you will direct people to the right investment partners, to the right bank, to the right ecosystem, because some of the ecosystems are good for certain activities, but not for others. So by just sharing over lunch or just entering this type of place where we are today, it's a very good idea.
There's one thing that maybe people don't usually speak about, right? So as a startup today, especially if you just started your business, so one of the biggest costs that you factor into your financial model, into your model, or into your cost structure is the lease. So we have many lessors in the economy. We have many lessors around the region. And what would startups want to see those lessors help with? I mean, is there something specific that today is not really helpful in this region when it comes to that lease agreement, when it comes to that, because that's a huge factor in the cost, especially when you're at a pre-MVP stage where you still don't have a revenue in place.
Yeah, front-loaded costs are obviously crippling for a lot of people. To have some kind of, payment plan or subscription over the year is much more palatable, especially while you're trying to raise a seed, or any round actually.
Well, I think historically here, it's again on a regional basis, is your license, your incorporation is tied to your lease, right? Yeah. So clearly that needs to be disrupted, because the value is not.
Sorry, but to add to that, it's not just the license and the lease; it's also the visa.
The visa, yeah.
So it's everything that goes with it.
Yeah. Is tied to your this kind of number of square meters you've taken. So I think there is a shift towards the actual value is not how many square meters you occupy, but what your economic activity is. So I think that realization, particularly in the Gulf, is in the GCCs, there is a realization of this, that we want to make sure that works. And there are lots of good initiatives around that. I think there's a very important question now post-COVID around the nature of remote work versus kind of in-place work. So, and this debate is happening globally, right? I think that there will be some mixture of in-office work versus work at home or remote work, and that's just what the pandemic showed, is that you can have some good elements of productivity from working from home, but you also need some in-person collaborative work that is around that. Back to that culture point, you can't build culture on Zoom. Very hard to, at least, or do things collaboratively. So there's some mix of that, but that creates this huge pressure on this idea that I need a huge office, right? So the idea that you need like as big an office as you might have before, especially in an environment where you have to front load all those costs, it becomes even more so divorced from the reality of what startups want or need.
So there is always that question, right? So as a startup, do I need to look for a permanent employee? Now we agree, okay, it can be a remote employee, but when I hire that should I hire on a project basis, or should I have that person that work for me full time on a long-term basis? I mean, with COVID-19 and with everything that's been happening, so what are startups today?
Well, I don't think that COVID's really changed that, because I think in my experience, the startups that I've worked with have always kind of outsourced and had more contract or project teams. Even companies that aren't startups anymore have, you know, those kind of more temporary or project-based resources. So I haven't seen that as being a change, and it's normally just at what stage do we now get a permanent team member in. So it's very common to reduce costs, to reduce all of the expense that's related to permanent employees and that contract, to have people working on freelance or just consulting basis. I'm sure you guys have a lot to add.
I think it's less pertinent to kind of early stage companies. As they get bigger, it becomes more important. I think the other really interesting question around this is, the rise of freelance work or temporary work. One thing, if you chart back, and I think also we were talking about this morning at the office, which is that if you go back to like the last major economic crisis in 2008, 2009, you see some interesting trends. So the companies like, Fiverr, et cetera, they were founded around those times. And so are companies around the gig economy, whether that's Uber or Airbnb or kind of similar businesses. From the supply side of the workers, there are people looking, companies were founded to facilitate people supplementing their income or finding new ways of having income and having a more flexible way of generating income. And then on the demand side, I think during large economic shocks, large corporates, as opposed to startups, are always interested in how do we become more efficient on our cost base. And so that's why you have a huge uptick in companies like, in the demand for companies like Fiverr and Odesk or whatever it is. You go back 2009 and then you look at 2020, very similar. You have huge demand for that. For our region, there's a massive opportunity in building those types of marketplaces for freelancers. There are some structural inhibitors like visas. It's hard to be a freelance worker here. But I think COVID is beginning to dismantle that. And I think that is one, like the future of work and how we think about work. We're yet to see, if we were to pause and say in 10 years' time what it's going to look like, what's going to come out of this massive economic dislocation that we had in the past year. I think it'll be just as profound as what Airbnb and Uber and these other platforms did in 2008, 2009. It's a similar sort of structural change in the economy, but it's more at the corporate level rather than startups using the freelancers. Because startups they're small and efficient by nature, but then they get to a point where they need to engage with that type of offering.
Yeah, I guess it depends also on the type of work that you need.
Yeah, but take care that the outsourcing has also its sets of limitations because of the culture, very, very simply. When we were a very young startup, we were doing a lot of outsourcing because of the finance. We couldn't hire full-time the people. And also we were developing some small R&D modules on a project basis. But we are confronted to the problem of who we are hiring. The people that are living in the middle of project, you don't control them. You are not sure if they are treated correctly by the outsourcer. So all these type of problems make the result. I'm not a great fan of it. Later on, we have hired on full-time basis some people working remotely. Sometimes it works perfect. For the developers, it works pretty good because there are a lot of tools to control the quality of their work and the productivity, so that works pretty well. For some other works, like salespeople, it takes a lot of time to see if the pipeline is built and is converting, so it's much more risky.
So let's move now to scaling regionally. So maybe I'd like you to answer first, maybe Renaud, as a startup. what would you be looking for? I mean, when you start scaling regionally, you want to look at starting maybe in a second or third country, growing there. What would you want your investors or your ecosystem enablers to help you with to start that or to start going to that route?
My investors, I would like them to finance me, to find me new customers, to solve all my issues. That would be ideal, but it's not happening. No, more seriously, I think what we are looking is smart money. So not only the people that can help you to grow a business and to invest, but also with some connections, with the right portfolio as well. That's very important. That's where we are very fortunate, because our product is particularly well suited for the SMBs and the startup, the tech-enabled companies. So obviously a VC in the region is very much into this. So we had a lot of opportunities to introduce a product to our portfolio company in our investors. What you are looking also is when you are expanding to other geographies is an help, because it's not easy to move to another country. I think Dubai is very particular in this respect, because it's an ideal market, in my opinion, for a pilot project. It's relatively small, but you've got people from all over the place, so it's very good to test as a concept. But the market size makes, in most cases, mandatory to go and to visit other countries. So the main option after the UAE is obviously Saudi, which is a big market. It's a big challenge as well. So if you can have someone to help you to do that for you, or to guide you how to do it, I mean, that's really good.
So Khaled, you've invested in a lot of companies that are based within the region, or maybe some of them out of the region, or outside the region also. What, based on your experience, I mean, what did you see that helped them a lot when they came to scale, to when they came to grow or start attracting new markets?
Yeah, I think it's important to have a regional outlook from the beginning, right? Like each of our individual markets are not big enough, you know. Really, you know, you want to be in multiple markets at the same, like over time, right? You want to grow that very quickly. It's really, really, really hard to do. Regulatory-wise, it's complicated. You know, you have to kind of adapt your product for local tastes and preferences. So that's another kind of critical factor, understanding local tastes and preferences. Having kind of the right legal setup in each country is complicated too. You know, like it's not easy. But that's one of our best one of our best kind of defensibility angles for like global companies coming here, because it's like, you know, why did Amazon like acquire Souq? Because it looked at it in a good market, but oh God, it's like 3-4 countries and I have to be in, and like each has its own. Oh, somebody's already doing it, I'll buy it. And that's one of the best reasons why Uber also, even though they're operating here, they opted kind of to acquire Careem, was another reason for that. So having kind of a regional outlook footprint is critical. Doing that in practice is very hard. Companies that crack it are the ones that tend to kind of get to like a really positive outcome. I think localizing your talent per country matters. You can't just, sometimes it works, but you can't just drop ship people from, throw someone in Egypt, say like, go run. You need to kind of find someone who understands local context too, and build out a team that understands the local context matters a lot.
So you mentioned one important point, right? The regulatory aspect and the legal aspect. So I mean, what are the main pains that those startups face when they go to new markets?
I think the key thing is structuring it right from day one, because if you structure a regional expansion in the wrong way, the cost of fixing it up can be debilitating. And it's not just the price, it's the time. The other thing a lot of startups don't ask is they'll always be like, how much does it cost to set up? They don't ask you how much the cost of shutting it down, because not all markets work. So you can go into a market in 12 to 18 months' time, you realize it's just not working. And then they might find that the cost is 3 times the cost of what they thought they had to set up to shut it down. So there's a lot of those things. So it's really properly understanding that before they start that expansion. But it is a huge time, and it comes back to more likely it's probably one of the founders or the COO of the business who's going to be doing this. Having someone who can support them through that journey is great, but that's a service. And it's a huge amount of time. It's not a fast process. It's hopefully going to get a lot easier. Although regionally we're all very close, and if you combine the regional population, it's a decent size. But every time you cross the border, you need to notarize and legalize documents. You have a different regime. You have a different regulatory environment. You can't always own companies 100%. You might, depending on your category of license, require additional regulatory approval. If you get non-GCC national investors at the top, you might find that it requires an additional investment license, right? So the thought of just going to a country seems easy, but the reality is you have to think through a lot of these points.
I mean, I want to say horror story is a strong word, like a cautionary tale from portfolio company. Mid-sized business does quite well, but it's not a huge business by any consideration. Had like 37 subsidiaries in like different countries, even in country, different areas of a country. And then, they were kind of winning business, and the business required that they set up a company here, a company there to win the business, because some of it was government related. Ended up with like a massive audit bill, right? Like it's just so many companies, and it's just like, this is still a small business, right? Like, I think sometimes you can get too excited about like, okay, we need to set up a subsidiary here, so let's do it. But then there are like real administrative costs to that. And then when you want to unwind it, like to your point, that's like time, and like it's time and money. I mean, it's really can be destructive.
When you hear a startup that does unfortunately go into liquidation, if it for whatever reason can't get to its next funding round, it's never zero. That is when you've run out of money. It's often something like $100,000. When you're down to that last 100, that's your zero, just because of the time and cost it's going to cost to actually unwind the business if you're not going to get future funding. The subsidiary point is a nightmare, because also remember that costs are yearly. So it's not like if you knew you could just pay now and then next year there's no cost, but actually that cost will repeat itself and it compounds.
It's an OpEx.
Yeah.
It's an ongoing cost. Yeah, it's an ongoing OpEx.
And then you need someone who understands there's an increased compliance regulatory side now to a lot of companies in relation to every country has substance and nexus and submitting accounts and all these kind of extra stages. And if the founders are too busy running their business, trying to expand, they can actually let that fall behind, and it can become quite a nightmare for them.
Now, talking about the talent side of it. So if I want to scale, as a startup, if I want to scale, I mean, you've dealt with a lot of those startups that are scaling. So is it better for me today to have one of my management go there and start, or is it better to have someone from that certain country help me build that business in there?
I would say predominantly clients and other businesses that I work with or have done in the past are looking for country managers and heads of, as they expand into a new city or country, that have deep local knowledge already. So I think, most businesses here are quite aware of the need for that localization. And also it depends on different functions as well. There are some people that you could internally transfer there, it wouldn't be necessary, but other areas where you would really need to have people on the ground, which poses a whole other issue, because talent, as hard as it is to get in the UAE, can be even more of a challenge in Saudi and in Egypt, where there's a great need for super talent there. And they produce their own, by the way, massively, but they tend to be moving around the world and being snapped up by other big businesses in Berlin and Silicon Valley and here. So the regional talent issue is becoming a much bigger issue, and it tends to be something that's really causing quite a large, timely obstacle in terms of wanting to launch in a new market. And I don't know if you've experienced that, but finding the talents is a huge blocker for expansion.
Yeah, I agree, 100%.
Yeah. Okay. So maybe the last question here is, We have, the region has changed massively over the last 15 years, right? And there are a lot of changes that are coming into the future. If you had, maybe this question goes to each one of you. So if you had one wish that you would want to see in this region happening, that you've seen elsewhere, and you want that to happen in this region sooner rather than later, what would that be?
For kind of the startup ecosystem, I think we were mentioning this right before we started. I think we need a viable capital markets reform, right? And that means like a vibrant public market segment. And I think the region would really benefit from really relaxing a lot of like the regulation around capital markets across different exchanges. I'm not just talking about like UAE or Saudi, like across the board. I think there's a need to kind of liberalize that kind of exchange requirements to kind of create more liquidity, to allow companies to go public, but also it democratizes access to investors to share in that wealth that's being created, so that you can invest in whatever. The fastest growing segment in our economy is tech, but if you have like $5,000 worth of savings, you have no access to that, right? So if there's a way to get kind of easier for companies to go public, then it's good for the companies, it's good for the shareholders, but it's also good for the citizens, right? Like to kind of join in that wealth creation because they can buy shares easily, etc. And then related to that is, we need to kind of create like a wish list large regional exchange. I think that would be really interesting to do because there's a lot of depth, right? There's a lot of capital, but it's very fragmented. So I think that's a really interesting thing to, I think very hard to do really, but an interesting project. The other thing is ease of we talked a lot about this, operating cross-border. Really kind of having more depth in the free trade zone, and wider free trade zones, and cross-border movement becoming much, much easier. I think that's because then when you aggregate this part of the world, it gets interesting, right? It's a sizable economy once you kind of go from, and I'm talking from like Pakistan to Morocco, like that kind of size, even up to like places like Turkey, right? That's a really interesting economic block. If there's a way to kind of make it smoother, to be interoperable and move across people, to move goods, to move people, and transactions, I think that's definitely top of the wish list.
Basically take out some of the economic barriers that there are.
Yeah, just the kind of like, administrative barriers, because that becomes really interesting. It becomes one of the world's largest economies overnight.
Yeah, and the youngest population, and the biggest opportunity in terms of e-commerce. Yeah, it's a massive opportunity, and it's a great chance for a lot of these countries that still are still emerging. I mean, part of Africa, Pakistan, it will benefit to a lot of countries.
As an entrepreneur, maybe that question is for you now. What's your wish list?
I've got a lot of my wish list, but I think, money is really the blood of the business. So the access to the capital is something which is essential. Of course, the VCs, they are playing a critical role there, but we are suffering a bit from the banks. Not enough help from the banks in terms of loans, or too much bureaucracy, I would say. So that would be really something that would be helpful. Maybe the debt market for the startups. Something like that. You've got in other regions in the world, we are talking with potential debt venture suppliers. It's not enough developed here. So to have access to all the tools that basically other startups in Europe or in the US have access to, that would be great. Yeah.
On the debt venture side, I think that is starting already, right? So last week there was an announcement, I think, Pure Harvest, was it? I think they've raised, yeah.
There have been a few. It's starting to kind of to materialize.
Lee, so maybe this question goes to both sides. So you're also a co-founder, and you also manage the regulatory or the legal aspect of it. So it would be interesting to see from your side.
I think my wish list is probably the same, whichever side, because it's still a pain point. But I'd say I would love to see the GCC work on a blockchain KYC solution. And that's not at an individual level necessarily, it's at a company regulatory level. A lot of regulators now are only issuing digital company certificates and related documents, which, historically it was always, I need it printed, stamped, notarized, legalized, couriered, Ministry of Finance, and a lot of steps. If we can get to a stage just at the GCC as a starting point where everyone accepts a new form of exchanging this information and it's signed up by the GCC with a sort of a 2-year rollout, I think that would be an amazing ability to expand, because you'd be able to say, my parent company is here and I want to set up there, and they're like, yep, instantly I recognize that. And if they recognize that regulator, they recognize the ultimate beneficial owners, which are the KYC. Compliance is a very complicated, and it's only growing as being a bigger issue. So that's number one. If that is done, then ultimately banking then can come in next, because banking is ultimately both bureaucratic and compliance is what's holding them back. So for banks to be able to move faster, they need some direction from a digital or blockchain-based solution right from the top. And it will come, and we know it's coming. But it just needs to come at pace, because at the moment, while the rest of the world are moving for mobilized banking solutions that can be set up within a couple of hours, we need that. For startups, they need to be able to know they can pay a freelancer, or they need to be able to pay an employee reasonably quickly as soon as they get funding.
So we'll land.
From a talent perspective, from obviously my main perspective, I don't think we need to change too much. I'm quite happy that Dubai, the UAE and the Middle East is a location that is very attractive for a lot of people. Most of the time, the reasons that people don't want to move here is purely because of, maybe kids are at a certain stage in school and they can't move. It is seen as a destination, especially in the tech world that we all live in terms of the amount of potential that the region has. People do see that growth, so they've worked at incredible businesses in Europe, the US, anywhere that's more developed, not an emerging market, and they see how far we've got to go, but also there is a great understanding globally that we're going to get there much quicker than it took you to get there in Europe and the US, because of the great people and talents that we have here. There's the amount of drive, the speed in which we work here is quite phenomenal, I think, compared to the how long it took other companies to get to the stage we're at now. So it's seen as an attractive location. So in terms of talent, I don't think I don't need to see any big glaring changes to be able to attract people here. So it's not so bad from that perspective. Okay.
So maybe to end this, maybe I'll give you a brief history of how we started at Scality. So around 16 months ago, we approached different startups in this region, and different startups actually abroad, mainly in Europe and Asia. And it was always that question: why aren't you guys looking at this region, or why aren't you guys starting in this region? And it was always this same answer, right? There are too many pain points today in this region that we don't understand. There are too many hurdles that we see other people facing, and which is why we came up with Scality as a project, and hopefully, watch out the space. With Scality, there's a lot of changes that are going to happen, and a lot of things that are going to happen beyond Scality, I would say. So I think the way I would like to think of ourselves is we're the ones that are starting this movement from becoming a real estate lessor to becoming a long-term partner, and we really hope that other people are going to follow our route. Thank you everyone for joining us today at the panel discussion, and hopefully we'll see you soon.
Pleasure.
Thank you very much.
Thank you.